Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thanks, everybody. Well, good morning. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today. We've got a lot to go over. It's quite an interesting day, a lot of opportunity, and of course, with opportunity comes risk. However, if you're in the Bookmap Discord Trader Lab community and you are building out a structured and vetted trade plan, there was a lot of opportunity. I'm going to review some of these trades. I'm also going to tell you the rationale behind them. The thing about the Trader Lab, so you understand, it's a group of like-minded traders have come together to leverage their collective experience, and it is based on structured trades that I've shared with the Trader Lab community. The idea of the Trader Lab community is to leverage the experience of different traders with different experience and different time in. There's not necessarily a right way to trade, but I think as retail traders, and I've been on both sides as a professional and also out here with you, there's a lot of things that many retail traders do which are not in alignment with what the actual business of trading is, at least in my opinion. So how do we differentiate between the business we're in and what we imagine it to be? That's what Trader Lab is. Help you understand the business, help you understand what differentiates traders that can actually sustain themselves and potentially build a business here, and also what are the differences in the sense of what typical retail traders do and why their success rate is so poor. And that doesn't mean, of course, that you'll be successful, because there's a lot of elements, but it's probably not as mysterious as you think it is. It's actually somewhat formulaic. So if you're interested in Trader Lab, there's an open invitation and there is no cost to come to and become part of the Bookmap Discord Trader Lab community. And there is not only 60 PDFs of these structured trades that you can download and reverse engineer, not only the community, but also a library of webinars so you could see this process over and over and over again in different fractals or time frames. Some of these are up to 5 hours long almost of real-time narration. So there's something for everybody. So again, thank you for visiting Trader Lab. Let's get on with it. And I only have a brief amount of time, so I'm going to go as quickly as I can. And if you want more information and to get more detail, I am posting regularly in the Bookmap Discord Trader Lab community as well as everybody else. And if I have time, I'll just give you a quick peek at some of that. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. If we get into real time, we'll talk. Otherwise, you can come to the Bookmap Discord Trader Lab community, and there's loads of streams with real-time narration that you can download, take a look, and watch at no cost. Also, I want to remind you all, I'm streaming from Costa Rica. We have a very flimsy infrastructure here in the jungle, so things happen and for no reason. So if I drop out and you're in YouTube, please be advised I will return, as MacArthur said in the Philippines. But might take up to 5 minutes and a new link will pop and we will continue along. So please give a thumb up, smash the like button, it helps the stream, and thanks again for visiting a Trader Lab. Now I'm going to show you guys a higher time frame perspective, and it's very important that you understand the condition theoretically. Guys, apologies for that. Costa Rica, what can I tell you? You know, they're running around here with chainsaws in the jungle cutting stuff down. That might tell you something. Okay, this is the RTH. Yesterday's, actually, hold on. Let me get my brain back into this. When this happens, it's not good. Okay. Let me try. I want to show you the higher time frame. So here, this was support, 1775, and I believe this is, let me just get my brain here, January 8th, right? I think everything got messed up here. Okay, then yeah, I'm just kind of out of sorts here. Sorry about that. So let's I'm just going to try to move a little bit forward here to show you these levels and why they're important. 58, 14, 25. I believe this was yesterday's level. That was our target coming down, and that is support. Resistance was up around here and here, 71.25, and we closed above it. When we closed above it, it sets up, so here's what you have. Shorts here, shorts in the morning to the target, which was yesterday. Then we squeeze the shorts out, and then the possibility is the following. Yesterday, I was looking for the short squeeze and potential continuation lower. What we got instead was we pushed through the key level, which was here and there, and then we gapped this morning. When you gap, what are you doing? You're squeezing. Now, at some point, either the buyers take control and we're off our merry way, or all it is a continuation of the squeeze. You would understand this if you're in Trader Lab. So now we gap and up we go. Where to, as they say, nobody knows. So let's go take a look now what happens today. And let's remember we have this level over in here, a low volume node, so 375, and wherever, nobody knows. This is part of the joy of trading. No prediction, just maybe. 0375, it is a level, it is here on the chart. Let me go back a day so you can kind of see. This is auction market theory. See if I can get the right way here. So where do these levels come from? 375. It is what's called a composite low volume node, and it is right here on my Bookmap chart, 375. So that is an important level, 375, 375. Okay, so that's an important level. So if I know this is important, I know that this is like an outside edge of a distribution. That is basically a big consolidation and a higher time frame. So call this our higher time frame, call this our intermediate time frame, and then we trade inside of this, okay? And time, as you know, in the developing time frame, and I don't like to use the word, but I'm going to use it, is not based on the clock. So now what we do is we gap, we squeeze, and we get more buyers, and we squeeze these sellers. And in the Trader Lab, something I always say is the market goes up to go down, the market goes down to go up, the market goes up to go down. What do you think the trend might be? Is the trend up? Is the trend down? Well, I think that's always subject to debate based on your quote time frame. But for me, I'm leaning to the south side, but that doesn't mean I don't trade the long side, right? If you're a day trader, you could, do whatever. Doesn't matter. What matters in trading, and this is what we focus on in the Trader Lab, is only interacting with the other participants when you have a statistical edge. Other than that, hang out, have a mint julep, sit in your Barca lounger, because that's just gambling. You wait for your trades, and you wait for your edge. And if you're in Trader Lab, you know where the trades might show up, but you never know the outcome, because the casinos, who actually are in a similar environment to us, because they don't know the cards coming out of the deck or how gamblers play the cards, just like we don't know what the other participants will do, right? They do really well because they only interact in a certain fashion. And for us, it's levels and locations. For them, it's vetted games. Setups or structured trades are basically vetted games. So if it's vetted, you wait and only play the game that has an edge. You're not making it up, or else you're just sitting with the gamblers. So this is the RTH open. Now let's look at a couple of things. We are gapping. So this was yesterday's high. If this is the RTH open, this is a gap out of range. Now, where's our potential targets? This 17, and I don't know if I should spend a lot of time on this, but the 17 is an important level right here that we've rejected on this down day. So I know this might be too high. I know if I'm above this and this, that this might be too low. So I might have support in here, and I might have resistance up there, and I know this is a low volume area where I can check into. That's what I know. That's all I know. But I don't need to know a lot more than that, because now I have to try to be in alignment. So this is where these levels are coming from. ETH high. Now let's go a little deeper. And you go, yeah, let's look at that. What did we do? Well, we checked yesterday's high in the ETH, and our ETH low and settlement is right at this previous location, 71. I'm going to bring you back. Why am I doing this and not giving you all the exciting stuff that these other trade callers will do? Because if you don't understand how the market works, you're wasting your time. And I am hoping you don't think being here is a waste of time. 71.25, key level. Why is this important? This is auction market theory. Where is that? 71.25. Where's the ETH low? Right on the test of 71.25. Too low. Where's yesterday's high? Right here. I now open above, see the thing? Gap above yesterday's high. We already tested this, too low. What does that set up? Possibility of coming up here. But what did we do in the ETH? We tested the high level. I'm now in between these two locations with a gap. Market is short, new longs in the market. What does that suggest? Potentially, subject to your plan, looking for shorts. Or, again, subject to plan, longs and shorts. Or, what's your edge? Let's watch. Now, I gap. So the possibilities are buyers, sellers. Of course, you're going, buyers and sellers. Yeah, but which one? So what's my first trade? Well, if I gap, I know I'm squeezing shorts out. If I run out of buyers, I may entice those sellers. This is the ETH volume point of control. If you're thinking about auction, which I hope you do, because that's what this is about, how the market works, why it does what it does, how at times you get in alignment with structured trades, building out trade plans, career building, etc. Trader lab processes that you can vet and reverse engineer, create statistical edge, stop gambling, leave the gambling, go to casino, get the cocktails and the ticket to the buffet. If you want to be in the business of trading, it's not about gambling. And that's up to you, of course. So let's look at Bookmap. So I have the RTH open. I know up above might be too high. I know down below might be too low, and I don't know. This is the ETH highest volume. The way the auction tends to work is it's a shopping experience. So if you go to the store, you already understand trading. What you don't understand is that shopping and trading have a lot in common. If a price is too high in the store, you won't pay it, you'll leave the store. If the price is on sale, you'll throw 2 extra in the cart, right? And then there's the retail price where buyers and sellers agree, and that creates high volume. We do the same thing here, except the stores for us are consolidations. They can be as small as this, and based on the auction, even in this little thing, we can read the potential for it to go lower. That's called a fractal. I don't use time because time has no bearing on what happens here in the developing time frame. The RTH, the ETH, they are bracketed by the clock, open and close. Anything after that or in between is not time-based, in my opinion. Now you can use a clock, but what does the clock have to do with the time it takes for participants to go, nah, I'm not paying that, and they leave the store? Do they have to punch a clock? No. So I'm just saying, think about it if you haven't. So this is the retail price in the ETH, and we don't know yet where any of this is going on, except we have a gap, we have the RTH open, this is the retail price. This is a stop sweep right here, sweep. When I see sweeps, it sets up the potential for a rotation in the opposite direction. Now, we're coming into the RTH open, and we have 30 seconds. So right here before the open, I see the sweep. That suggests to me I'm looking for a short. Maybe. Let's look. Now, RTH open, there it is. This is the retail price from the ETH, and this is a low volume area and a level. Remember, 5903, I showed you this at the top of the stream. Right here, I'm looking to see if I get a short. Now, this is very aggressive, and this is not for newer traders. It's where you learn to read the auction. Now, the thing to understand about what you're seeing here is I don't use indicators. I found that if I can learn to read this order flow and what these things mean, I don't want to wait for a backward-looking lagging indicator. What I want to do is try to execute without confirmation, but with information. The information is right here. So here's the information. Maybe this is too high. Here's a sweep, and I have microstructure right here that says maybe too high. Watch. And I'm now going into the open. Here's my test of the retail price from the ETH. Very micro. And again, these aren't trade recommendations. This is Trader Lab process. And you can learn this. Now, and I want to remind everybody, these are structured trades, but not something most can trade because of speed. This is 10 seconds in. So what does it take to do this? Well, first of all, you have to understand what it says, foreign language. Then at some point, you can become fluent. That requires intentional practice and, of course, being in the Trader Lab community. And don't forget, I'm streaming from Costa Rica. This thing can drop out if the wind blows. In fact, monkey swings on a vine, anything can happen. And just like before, I dropped out for about 5 minutes. It takes me about 5 minutes to come back. So this is a potential short in the Trader Lab, just mentioning it. And it happens right here, and it was set up right there with the sweep. So right here, overnight volume point of control, retail price, RTH open, there's the open, look to the right, check this, if it's too high, and now this is the retail price, it starts at 0, volume, I'm measuring volume, that's what this is, called volume profile. If that's too high, this is too high, and I break away, this is resistance, this is resistance. Let's label it. Notice the alignment. And again, these are not recommendations. You have to vet these for yourself. Let's see what happens here. Variable high volume node. I made these up because they didn't exist, So I had to make it up. I didn't know. So I said, this is very interesting. Why does price and volume migrate? Well, it's shopping. Trading is not your indicators. It is the participant desire to figure out what's a fair price. This is the auction. What's too high? What's too low? Right here, this is too low. But what do we know is too high? Well, the volume is now moving down with price. Maybe these prices are too high. Maybe this is resistance. Let's see. Well, what's going on here? Too high, too high, too high. This is resistance. VWAP in mid, break here, break down. All of these are too high, aren't they? Maybe. Now, what else do I know? If you're in the Trader Lab, we use statistics, and I don't have time to go over them, but there is a high probability, and I'll leave it at that, that we get to the ETH mid, which is there. So if you took a short here, and it's probably about an 80%-ish probability. In fact, I can't help myself. I'm going to give it to you. We opened higher outside of range, getting to the ETH mid is about a 62% probability. Past performance not indicative of future results. Getting to the overnight volume point of control is about a 79% probability. That's right there. Getting to the ETH high or low, and you have to vet these for yourself, past performance not indicative of future results, is a 93% probability. Think about that. Just looking here. Okay, there's more, but I don't have time to go over them. You'll get the idea. So I have a good probability of getting here, and then I have a gap. Let's look. So too high. So this is a Trader Lab short. You could be short there. You could be managing your trade here. These are not trade recommendations. This is resistance. This is resistance. Let's just see what it does. Where's your target? Here for a scale, and then you're holding. And where are we trying to go? Into the gap. Where she goes, who knows? Let's watch. There's our gap. So that's our gap. Wait a minute. Let me just make sure I got this right. Yeah. And where's yesterday's high? It's at the gap low. Now right here, we come down here and we leave our gap. As soon as we come above here, this trade is over. So this is a short to here, to here, to here. Now, what is next? Well, I know this might be too high, and I have my short here. Here's the other thing I know. If we're going to be squeezing out, there's a couple possibilities. You gap higher, that's the end of it. You go south and you pummel the longs from yesterday. Or we get our shorts here, and then we come up and squeeze these guys. All these things are possible. Nobody knows the answer. So I don't know what it is. So now the stops over here get taken out. So here's your choices in Trader Lab. You can be now off the shorts. You could be long, or you're flat. And this is, we have a lot of conversations about this in Trader Lab because we don't know. Do you know? I don't know. Now here's another Trader Lab structured trade. Let's take a look right here. Now we have always an ongoing debate in Trader Lab about what's going on. And I would love to tell you that we know, but nobody knows. So remember, trading is not a business of predicting. It is a business of maybe. Write that down. It's a business of maybe. And what's my level? 59.03, and this was too high. If I come above here, now I don't have any levels. Where's my next levels? Well, this was the ETH high, and if you remember, this is an important level, 17. Remember where it came from? Remember? Let me bring you back. Where did it come from? Where did these things come from? This is the auction. This was too high, 17. And on this day where we broke out of this consolidation, we rejected this. That set up our shorts for this day down. It was a wonderful day. Then we get our shorts and our squeeze. And then this morning, the gap and the squeeze. This is too high. Now, I don't know. 59.03. Remember, outside edge. I don't know. And what else do I know? What did we do in the ETH? We came back to 17. Too high. If it's too high here, I now have some benchmarks. So I got this, I got that, and I don't know. But is everybody tracking? Now I have levels based on participant behavior, not my indicators, because I don't use any. What do I use? What is the market based on? It's based on participant behavior, not your indicators. Are you guys tracking? So how do we trade this thing? Great question. So I'm going to show you some order flow now. Let me see if I can do this without too much trouble. So notice the liquidity comes in the order book. Now I was looking at this, and in the Trader Lab, I kind of shy away from going, at least here in the stream, not in the Trader Lab, but I should say for developing traders, we want to use the tools, but we want to try to prioritize inputs. The nuance comes in the order flow. It's the triggering behavior that order flow helps us, but we need to overlay it on something. And I call this a chassis. So the auction is the participant behavior, and if you understand what it says, because it's a language, you might be able to do something with it. So let's look at the order flow and let's look at the language of the market. Liquidity comes into the order book. This is called the heat map. And what it is, it's showing us where the limit order book is and where the volume is or the resting liquidity is. I can't be looking over here. These numbers are all flashing and changing. There's algos, there's everybody but their Aunt Bertha in here. I can't be looking at that and concentrating here. So I see this guy come in here, and I see more liquidity coming in here, and I know I'm above this level and I'm above here. And I know 17 is too high. That's all I know. Now I'm watching. I get something called VPOC migration right here. So I'm going to label this, and now the volume point of control is shifting here. That is saying what's below me is too low. It's a form of support and resistance, and it's based on shopping. If the volume is here, that means everybody's willing to do business, high volume, and the price moves away. Let's think about this. And now the fair price is here. That means now that there's more volume here in the developing time frame than there was down here. Prices moved. Buying and selling is going on here. But let's take it a step further. What happens if we come up to this level, and now that's the new price? You're now in the store, and you being the astute shopper, there are buyers and sellers at this price. But what happens if we leave the store? Now what is this? Maybe it's too high. Maybe that's too low. Maybe that's too high. What happened right here? What happened right there? Let's see what happened here. Limit order book is here. Passive sellers are here. There's your icebergs. And you got your buyers down here. Let's put a little box around this, and I'm only doing this to help you see it. You can see this in the profile, but you got to understand what a profile is. Why would we use something like this? And you're probably saying, I don't want to use that. It's like they landed on Mars. I understand. So what is this? Right here. Passive sellers are here. Passive buyers are down here. It's a rotation. So the market goes directional, and then it pauses. Chop, 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 chop. And either it's going to do that or it's going to do this. If it breaks here, and this is my retail price, it can come back and check it. Is this too low? VWAP in mid? Maybe. Is this too high? And I don't have the answer. I'm just saying it's a question. Let's see what happens here. Remember, liquidity is here. Liquidity is here. Break low. This is my retail price. Retail price moves down here. Is this too high? I wish I knew. I don't know. Let's watch. Right here, potentially too high. Right here. So this sets up a potential short here, and you're looking for it to come here. This is a potential short trade. Now, if you take a short, where do you put your stop? You've got a couple of choices. You can put it above here by about 2 or 3 ticks, or you can put it above the liquidity. Up to you. Couple choices. What's the right one? It's luck of the draw, guys. There is no right answer. Break low. What is this? Liquidity is here. Liquidity is here. So let's look at what happens here. If you put it about, and I always say 2 to 3 ticks, you would be stopped out. Okay? That's a stop. And I'm going to suggest, even though I'd have sympathies for me and anybody else, we have to get over it. If I come up here and my stop's not above the liquidity, and we all take stops, so don't even think about it. You don't want to take stops, you're in the wrong business. That's like saying I don't want to have any expenses or overhead. Casinos pay the gamblers. They seem to do okay. So what happens here? I come into the liquidity holds. I have my buy stops here. That would be me if my stop was here. And yes, I take stops. And then what? I see this and I'm thinking, now here's what I'm thinking. I'm going to tell you all about my thinking. This. Okay, we're going to go here. Right? Because there's over a 90% probability I take out either the ETH high or low. So I don't have a long. I'm going, I don't know. But here, I get my behavior. And this is my retail price right here. And I just pushed outside. Now, I thought that was it. And it went here. Life in the fast lane. And you know what I say to myself? Emotionally, I go, you know what we do. But what about it? Get over it. It's overhead and cost of production. Now look, right here, microstructure. I have no clue. I got my buyers here, buy stops, selling icebergs, liquidity. And what is this? What is that? Let's look at it. What is this? Chop, 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 break low, trigger, pull back, short, and you put your stop, wherever, and you're out. Come up here. Liquidity, watch, chop, chop, chop. Micro consolidation, trigger, with this behind you, test, short, stop. Now where to? Back here. Because why? You're going to potentially get buyers. So your stop stays here. You're looking to get risk neutral. We get below here. You're looking at this and then lower. Let's watch. Same trade. See it? So, short here, helmet on, going for this. Why? There's going to be stops here. So you want to scale ahead of it. You might get mechanical buyers and come back here. We break here. So you have two ways into this trade. You have there and you have here. This is resistance. Stop still would go there. So you have two entries short, and now you're going for this. Because there's always stops at the mid and the VWAP, and there's a mechanical retail buyers, and we don't know if they're going to be right or not. It's not our job is not to predict anything. It's to understand how the market works. Sorry, guys. How we doing? We doing okay? No video on Discord? Okay, well, guys, come over to YouTube. I don't know if I can do anything about that. I am a little limited here. Let me see what I can do. YouTube is probably the better plan at the moment. Okay, let's go. So, resistance. Now, let's follow the yellow brick road. This is TraderLab structured trading. I'm not saying it's good. I'm not saying it's bad. I'm saying it's maybe. Maybe it's okay. Maybe it's not. Maybe it'll work. Maybe anything will happen. What's this? Stop sweep. Target. So the short from here would scale here or not, or here. This is all trade plan specific. If this is too high, this is the last place that was too low. And if this becomes too high, we can come back to here. So this could be your scale, or you could scale here. But this is a sweep. Now, this is a key element, and this is how order flow can help you. When I see a sweep, I can anticipate the following things. First of all, there was a gap here, right? So right here, I see the sweep. I anticipate a counter rotation. This is how sweeps can help you. Nothing is predictive. Everything is maybe. So in the Trader Lab, what you would have is, when you see this, you have a trade management plan. You're not trying to get all of it, which is always nice if it happens, but that's not the real world. The real world of trading is getting your piece and then going on. Please give a thumb up and a like in YouTube. Don't forget, if I drop out, I'm in Costa Rica, it will recycle. So the sweep starts here, micro high volume structure. Let me just point this stuff out. You can learn this in Trader Lab. Remember, Trader Lab, there's no cost. And I'm looking for a reversal here because of the sweep. So now, and I'm only showing you possibilities, not recommendations, because I don't have any idea what's right for you. or your quote time frame. And remember, in my opinion, there is no time in the developing time frame. There is only fractals. This is a fractal. This is behavior. If this is too high, and that's what this is, I break away, same as this being too high, same as that being too high. But think Matryoshka dolls. We're going down in time frame. No time because there's no clock here, so it's fractal. Okay? That's why I say I don't like using the term, because retail traders are pretty rigid in their thinking. They think it's 2 minute, 5 minute, whatever it is, it is. And quite frankly, the market is not on the clock. It is on the behavior. So right here, this is too high. There's our sellers. But I have my sweeps. I'm still looking for reversals. Too high. There's my line. That's my volume. I'm not paying that. We leave. Now I have my sweeps, don't forget. Too high. I break low. Going to zero, Lewis. What happens here? I break above it. Trade could be over right here. VPOC migration. Now, watch. So you could be out of the short right here. Does it matter? It doesn't matter to me. What matters is trade management. That matters to me, and trade plan. Liquidity comes in here. Where do we come back? Let's just look VWAP and mid. If you don't have a trade here, you have nothing. Okay? It's not important. What's important is waiting for your trades. It's like waiting for a bus. This shifts down. That says too high. Okay? So now, what are we doing? Let's wait. This was the gap. This is yesterday's high. So now we filled the gap, and you actually filled the gap here. What might we anticipate when you fill a gap? Here's what you would anticipate: profit taking. Now, I'm going to show you the next trade. Now, what did we have here? Liquidity. What do we have here? I'm going to take you into microstructure. What is this? Too high, and I have nothing here. Let's just say I'm hanging out and I'm going, I don't know, because I do that most of the time. I'm going, I don't know. You think you know? Well, I know I don't know. So if I'm seeing this come down and I test yesterday's high, I anticipate. Now write this down. We need to anticipate to participate. We cannot predict. So I anticipate typical retail trader behavior that if you fill the gap, you're going to get profit taking. Kind of logical, isn't it? Don't you think that's possible? So if I get this rotation, then I have to look at the last area. Remember, chop, 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 break low, trigger, resistance, rotation. Fill the gap, chop, chop, chop. Let's look at it from both sides. Let's look at the microstructure. There's the volume. It's just there. I don't know anything about it, because right here I can keep going. But what do? I break the other side of the volume. These are consolidations. If you draw a box over here, let me do it just so you could see what it looks like. Again, I'm just showing you structure. So what I'm doing is I'm looking at what does it mean? Most of us are letting our indicators tell us something happened. Well, great. But what does this mean? Do you know what it means? It means there was a passive seller here and there's a passive buyer here. And when I break below it, this is too high. Now I have the same thing here, a passive seller here and a passive buyer here. When I break above it and I come back and check the volume, and this is now too low, I do this. And where was it last place? It was too high. It was right here. So let's kind of look and see what it does. See if this doesn't make sense. Stop sweep, potential short in this area. And your stop would need to be out here. Let's see what it does. Are you guys tracking? This is a Trader Labs short. Now, I don't know if that works for you or not. I'm just saying, if you are in the Trader Lab, you wouldn't know it's a short. You would know it's a location, and then you have to see, do you have an edge? And if you took this trade and the sweep shows you right here to be looking for this, let's look at the actual entry. What do we know? Too high. Here, from this structure, Where do I have a sweep? Where do I test? Here. Where's my next microstructure? Fractals. Think Russian dolls, Matryoshka dolls. Here. So I get my sweep, resistance, trigger, retracement, short, stop is above there or above there. It's all up to you. And where's my target? It is here. And then what? Potentially south of the border. Let's see. Not a recommendation. Are you guys with me? This is a Trader Lab structured trade. It's a little advanced, but it's a structured trade. If you're visiting in YouTube, you think this might be something that might interest you. Remember what the Trader Lab is. It's a group of traders who've come together to leverage their collective experience. It's not what I do. It's what I share. What I share is based on an understanding of how the market works, why it does what it does, and at times getting an alignment, but not making it up, waiting for vetted trades. This is a structured trade. It might not be your trade, and that's okay. Your trade, it's like a bus. Your bus might show up here. My bus might show up here because I have confluence of elements. You see? Just saying. So let's keep going. So short, Now what's here? This was support. Break below, test, keep going. Any reason to think it won't keep going? This is part of the, I don't know. Are you okay with I don't know? You got to be in trading. So you're not in the business of prediction. Remember that. So if you have a trade management plan, if you took this short, which is okay, you scale here. You have your micro high volume structure right there. Chop, 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 too high, break low, resistance, triggering structure, going to zero. Meanwhile, back at the structure, it's right there. Right there. Yesterday's high. Let's look. So that's a structure built on this. Support becomes resistance. Structure is here. Break low. Resistance. This becomes resistance. Break low. Going wherever. You run into liquidity. No clue. You see absorption here, and you see a sweep here. That suggests the potential for a counter rotation. The joy of trading is we can't predict anything other than maybe. So if I know this is too high and I'm trailing, I have choices right here. Right here, if I see this and it's in my plan, I can exit. But let's assume we think this thing's going to zero and that it's a trend continuation. And we have targets below. By the way, where's our next target below? You're going to ask. ETH low, which has a high probability, and coming back here, high probability. So these are all targets on the short side. So all of this is on the radar, but in between, we don't know. So take it off the table. Now I'm going to give you the but. There's always the catch. Here's the catch. Are you trading, what's your time frame or fractal? No time. Are you trading these large rotations and you're going to stay short and just have your stop up near the high of the day and take a nap or go to the gym like some traders do? Or are you going to be managing these rotations, getting taken out, and then looking to put the trade back out again at another location? It's all up to you and statistically what pays you. So let's look at this. Resistance, potential reversal. Don't know. Resistance, watch, resistance, and we have targets below. Let's just watch the yellow brick road. Takes you out right here, trades over. So where's resistance? Up here. Let's see what it does. And out here. So now we're just going to wait. Do we want to be long or short? It's a great question. Wouldn't you like to know the answer? So where's my resistance? It's here. Do I have a trade here? Nope. I have nothing. I'm in the middle of nowhere. So what do I have here, though? My variable high volume node or my VPOC. I have my mid and my VWAP. So if I come back, let's look at the structure. This is where the high volume is at the moment. So I came out here, I found too low. I have these statistics open. This is my first hour's low. Not yet, but it will be. And there's over 90% probability I take out either the first hour's high or low. Which one do you think it might be? Well, I'm inclined to think it's the one on the bottom, but I also know I don't know. Well, not my job. It's not your job, unless you want it to be your job, and then you can guess like everybody else does. In the meantime, what do we use? We use the participant behavior. Here's the other thing we use, common sense. What is the common sense? The market goes up to go down. The market goes down to go up. If the market is short, it'll come back on itself and it can squeeze these shorts out. What's above the market? Buy stops. So that's why the market rotates. If you're in Trader Lab, you're going to understand how the market works, but you're not going to be able to predict what it's going to do. So let's not focus on prediction. Let's focus on alignment. So I have no clue. And when this is going on, I'm going, what's going on? But what do we see here? So I don't have a location. Once I come above here, I'm in what's called two-sided trade. So if I found the outside edge on the downside, then where am I going to come back? And I don't know the answer, except right here, I see a sweep. So when I see a sweep, it puts me on alert for a potential counter rotation and maybe a reversal. So let's just see what it does out here. And these are never, again, these aren't trades. You know, it's just maybe. So let's see what it does. So I know out here I have liquidity, I have absorption, I have a sweep. It suggests a counter rotation. That's what it suggests. It doesn't suggest that this is the high of anything. It just suggests a rotation. There's my rotation. Do I have a location for a trade? I don't have anything. I've got nothing. I'm going, I don't know. And I find at times, like I think most traders might, if they're honest with themselves, that they get into a state of maybe. Now, it's always maybe as far as the outcome of the trade. But one of the things I share in Trader Lab is something called real-time narration. In other words, conditional narration. Because our job as traders is to get in alignment with the changing condition of the market. And we're never going to be in front of it. We're always going to be behind it. In other words, when it changes, we'll already be in the trade and we'll take a stop and then something changes. So we're not going to know in advance of change. We're going to know after. The way you might know change is to narrate. And the narration works something like this. If this, then that. If not, then what? If I come to the mid in here, so if this, then that. And if it reverses off here, then I know it's too high and we're going south. If not, then what? Then potential to go higher. If I see a sweep, if this, then that. Counter rotation. But if I don't get below here, then what? Then continuation higher. So I can narrate. Let's just see what it does. This is my potential support. This is my counter rotation. Now, it doesn't mean I get short. It means I'm in a narrative of trying to stay aligned with the market. Notice what it does. If I understand the auction, I understand that was too high. This is the retail price. Right up here was a sweep suggesting a rotation. This is, you can learn this. It's a foreign language to you. Google translators your indicators. All fine, except I'm not looking. If I was going to get short, I'm doing it there. I'm not doing it here. If I know this is support, then I need to see what happens here. And what happens here? Too low. Then what? Where's too high? It was there. So let's come back here and see the behavior. Where was too high? It's up here. And I don't have anything going on here. I'm just reading it and following. So it's a suspect. Now I shift up. Let's follow the yellow brick road. Now the retail is here. You'll see the shift. This is my variable high volume node. This is now retail. And what was too high? Up here. I don't know where the high of anything is. It's not my skill. Wish it was. but I gave up a long time ago and try to predict anything. My job as a trader is to get in alignment and just let it go as far as what's going to happen. But let's come back to a couple of pieces. Please give a thumb up, a like in YouTube. So here's what I know. I have a high probability of taking out the first hour's high or low, and that's set at 9:30 my time, Central Time. It's called the initial balance. Over 90% probability to take out the first, either high or low. I also know this is the ETH highest volume price, and we've been below it. I also know 59.0304 is an outside edge, and as far as I know, we can take out either the ETH high or low. There. And this is a key level. Do I know which one? No. So all I do, and look, let's look at something right here, by the way. This is a sweep. This is absorption. This is a sweep. Sweep suggests up. This is a really cool tool in Bookmap. So I have order flow interacts here, limit selling icebergs. That's what this is. It gives me that. I get absorption and a sweep. That suggests that. This is how order flow is helping me. Now I know right here I had too high and my seller. I also know if I come back here and here, I had too high. I'm in an area I can't predict anything except I see the potential for a rotation here. Let's see what it does. There's my rotation. It's all based on this. VPOC migration, too low, no clue. Stay with me. I'm clueless. Not ignorant, clueless. I'm not in the business of predicting. That set up our short rotation, right? Watch. Right here, I come up to my level. I intersect. I have no idea. I still have no idea. I always will have no idea. Right here, I'm seeing my selling. I have no clue. My locations are above me, and I'm above this. So I'm out here. This is high volume. Think of it this way. Only 19 went off up here. I'm not paying that. You ever go to the store, the price is ridiculous, but you need that can of tuna for your casserole. So somebody pays for it, but not a lot of volume. That's why it's too high. But down here is the outside edge of this developing consolidation. This is too low. Too high, too low, retail, right there. It's right there, high volume. So I'm sloshing, and it can either break high or break low. And I'm clueless. Watch. I get a break. VPOC migration. So now this suggests the following. If this is too high and I had my sellers and I get a sweep, this is suggesting rotation up. I get VPOC migration, new retail price. I know I'm in the minutia, but you got to follow with me. When we broke here, this is too low. I come up here. I don't know what's going on here, except now I know it might be too high. I get my sweep, suggests rotation up, and this is too low. Too low. New retail price. Watch what happens here. So I don't know. I'm going, what's going on? I really, truly am. I'm going to label this because it's a micro high volume structure. Now, all this is going on, and I'm doing this mentally. So I'm going, this is too high. There's my sweep, upside rotation. Variable high volume node is there and there. The high volume is here. So I know I'm in an area. And if I reject, I can go short, or I can just keep going here. 930, don't forget I have over a 90% probability. Sorry for the minutia. Watch. So I'm at a location. I got my sweep. I got my counter rotation, and I have no idea. Resistance, overnight high going who knows where. Micro composite low volume node, 03. Remember I showed you at the top of the stream. All of this is material. VPOC migration. Notice where I am. VPOC migration. I come right back to the same level. It's right there. Right there. Too low. Shift. Looking for this. What do I get? I'm not paying that. Everybody leaves the store. Now I have rejection. Now I can take shorts. Let's look. Too high, break. I can take a short here, or I can wait for it to come back here. Let's see what it does. Trigger, potentially short here, too high here, or nothing. Just follow it. Potentially too high here, just follow it. Too high, VPOC migration, either we're bouncing this way or we're going this way. Too high, another short in the Trader Lab, stop up here or right over here. It's all up to you. These are structured trades. Just follow the yellow brick road. And where are we going? 930, remember, a stat over 90% probability. Take this out. And now the structures and the trades in the Trader Lab are to check this and to go ETH low. Remember, we had that one over 90% probability. Next target is here, 60, and then wherever. And then this one, and yesterday's low is on the hit parade also. I don't know if we took that out. No, we didn't. So anyway, we have this also, yesterday's low and the potential to come under. And we also have 33. I think that's about it. Now, how you trade this is up to you and your fractal and time frame. Sorry, guys. Let me try to get reoriented here. Now, let's get into real-time narration. Questions, please post them. I'm going to try to go as fast as I can. Okay, microstructure. Hindsight, so don't shoot me. You have absorption here, selling icebergs, microstructure, break below here, outside edge, mean reversion into the book. Absorption here, microstructure short back to here, holding for here and lower. This is very tight and it has to fit the range you can operate in. I can operate in this because but I risk over here. So if I come here, notice the liquidity. This is the liquidity marker. It shows me the adds and pulls. They add 100, they pull 100. They add 96, we come up in here, you can see the absorption and the break. What happened here? Micro high volume structure. Let me show you how I do this. Not a trade recommendation. If this is too high and I break and I come back to check it. Remember shopping. You ever shop and go back to your favorite store and you go, I can't believe they're still charging this, and you get in a car? You leave the store and then you come back to check the price. You got to be kidding. Liquidity comes in the book. You would know this with an order flow tool. You see the sellers here. That's the iceberg. You take a short here. You stops over there. And where you're going? South of the border. Why would you be doing that? Because you understand how the market works. Where might your next target be? 31. Let's go see where some of these things might come from. You're asking me why. I know. I asked myself why many years ago. Why? Why? Let's look. Why? So if I understand how the market works, I can't predict. So let's just forget about that because the rotations are random. Casinos can't predict anything. What makes you think you can? You know, they would have figured it out. And I think they would probably skip the hands that they pay to gamblers, right? So let's assume they can't. Where's the high volume in the next higher time frame? It's around 30. That's on my chart, isn't it? So this is the current market. So I have this, and I'm not saying it'll do it today or ever. Yesterday's target is here. Is it possible, and I don't know, that we take this out eventually? But my next target's in this area, right there. Let me show you a little more. What's important? This. What is this? This is the intermediate time frame. This is a consolidation. It's called a micro composite. All it is high volume, low volume consolidations. And this orange line is the highest volume in this structure. And then we broke away from it, election party time for those, who were celebrating. Okay. And then this was the high volume. The nature of the market is to come back to retail. If this is too low in this time frame and this was the highest volume from that day. Oh, it's on sale. What's too high? Well, we know that's too high from this day, and we know this is too low from over there, and this is too high, and it was support from over there, which is why it was a target coming down. If I get the shorts in down here and squeeze them out, where's my target? Here. If I'm going to short, where am I shorting from? Here. If the market is short, I'm going to get sellers to there. And if the sellers get squeezed, they're going to get thrown under the bus to here. And then if we get shorts this morning, they're going to get squeezed up here. And then if those shorts, I should say the longs, get squeezed, and we know the shorts have the edge up here, then I'm looking to get short back to here. If I come back to here, I'm looking for these longs to get thrown under the proverbial bus. This is called understanding market mechanics, and you can learn this in the Bookmap Discord Trader Lab community. Are you guys with me? Is this making some sense? Please give a like, give a thumb up, visit the Bookmap Discord Trader Lab community. If you find this intriguing and interesting, it's a community of like-minded traders who've come together to leverage their collective experience so they can build something better. You need to understand the business you're in. And I think most retail traders come into this business kind of with a fantasy. I'm going to be a scalper. I'm going to make all this dough. Well, yeah, maybe. But based on the statistics of retail trader outcomes, I'm going to say good luck. And I sincerely mean that. Here's something I want to share with you, and I've been doing this lately. I just want to give you something to chew on. Remember, indicators and time frames. Isn't that where you've spent all your years or weeks or months in this business? Here's the list of indicators in my software package. It's Investor RT. It's a very sophisticated package. And a lot of these, I remember when they first came out, Equi indicator, Fibonacci arcs, extensions, projections, retracements, time zones. I worked with that. I thought that was pretty cool. Bollinger Bands, boundaries, brackets, bull power, buy, sell meter, candle pattern recognition, CCI, center of gravity, Chaikin money flow. Are you guys spending your life doing this, looking at indicators, curve fitting, thinking that the answer lies here? Is it possible there is no answer here? The answer lies outside of your time frames and indicator mix, because that's what most retail traders do, including me. When I started in the business, indicators were a new idea. Before that, there were no indicators. So I've been here, I'm like a dinosaur, trading 45 years. So I got to spend my life going down what I call Trader Groundhog Day, spending years trying to fix it. Well, I didn't understand is there was nothing wrong except my process was defective, but because of random success with it, strings of winners, everything is wonderful, then it starts breaking down, and I think, well, maybe I just got to tweak and tune this. Maybe that's the answer, because now it's working a little better. Look at that. I had 4 or 5 winners. This has got to be it. And then I got to tune and tweak it. Maybe if I change my time frame, because it would have fit better here with a 9 EMA and not a 12 EMA, or my VWAP, if I used one standard deviation instead of 1.5, look how well that worked this time. Or my Keltner, you know what I'm saying? That's what we all do because we think that's our business. I'm going to suggest to you the casinos don't operate that way, and that's the business model. They don't change their games so they win more. They anchor their inputs so they're consistent, so they only play games that have an edge. We don't do that. But what if we're actually in the gaming business, but we're not playing it like the business it is? Where does that leave us? Are we sitting on the same side of the table with the gamblers because we're using random inputs? Now, in the casinos, the cards coming out of the deck are random, and the gamblers play the cards randomly. That means it's 100% uncertain. So how do the casinos extract the dollars from the gamblers? Because they only play the games exactly the same way. That's what Trader Lab is based on. Taking a successful, proven business model and overlaying the trading business on top of it. We're not trying to reinvent the wheel. We already have the wheel. What we need to do is run in the track of a proven business process. Then you have to take the time and the effort to find your game or structured trades and only interact with the other participants when you have a statistical edge. It's the same as what the casinos do. And yes, they're going to pay the gamblers too. But isn't it interesting? They play games. They don't make them up. They only play the games exactly the same way. What happens if a gambler walks out with $100,000 in a suitcase? Do they change the game? We do. We make it up. We change where we manage our stops. We skip the next trade because we're emotionally attached. If the casinos were emotionally attached to the outcome of every hand, what would they do? They'd blow themselves out. They'd put themselves out of business. That's what retail traders do. They don't have discipline. They don't understand this is a business of probabilities, not a business of prediction. If I'm speaking to you because that's you, it's all of us. All of us. It's me, it's you, it's everybody else who's walked in your shoes. That's why the Trader Lab exists. Now, let's come back. This was too high, 62.5. This is an outside edge of a distribution, low volume node. What is a low volume node? It's an outside edge. Where'd it come from? My data hole? Thank you. So I don't know if this is accurate. The way the market tends to work is it rotates. What do we know? Too high. What do we know from the RTH yesterday? 62.5, I think. Yes, 60, I think that's right, and I don't know. Or previous day, 62.5. I'm a little scrambled over here because of my data hole. This is an outside edge. If this is an outside edge up here, it can do too high, too low, retail. And if I leave it, it's saying potentially too high. Now I'm over in this consolidation. Too high, too low, retail, volume point of control. If this is an outside edge and I come out here and it's too high, I can come back here. It's called mean reversion. Let's watch. Not a trade recommendation. My data has a hole in it, so I might not be seeing the picture very well. So I'm going to show you process. This is not a trade calling room. I take stops. I'm not calling trades. I'm showing you, and I have this data hole. This does suggest a problem. I'm going to now put a little line up here at this high volume area. Whoops, just blew something up over here. Sorry. You know, if I don't highlight the right chart and I push a button here to try to put something on the chart, nasty things happen. So let me try this again. Where's that level? I think it was here. So this is what's called a high volume node. And what it is in the auction, it's a price that we left behind. And this is going to be in the ballpark. And it's not going to be in the ballpark unless I get this unscrambled over here. Little software problem. Let me make sure I got this now. Okay, this ought to work. All right, so that's sort of your resistance right there. Should be, it's actually off a little bit. I'm just going to try to modify this. I'm going to remove it. And I'm going to try to come back up here. So that was rejected. That's the kind of thing, that's the thinking in the auction. The next level is out here, the low volume area, and it's around here. Let's put a little level here. And it's a low volume node. And it's outside edge of a consolidation. Now there's two things to know about this area. One is that it's an outside edge of a consolidation and we have stops out here. So that's a consideration, the outside edge. And it's called the low volume node. Mean reversion is outside in trading. So what we're thinking maybe, underline, is that if this outside edge is too high, we're going to come here, okay? Apologies for all the delay in getting these levels on the map for you. So this says if this is too high, we can go from there to here. So you'd be looking potentially in the area, not rigid, for a trigger. This is microstructure. This is a potential trigger. Let's see what happens in here. Now, we're just narrating together, and the market can push through these and still revert. This is called mean reversion. You'll be looking for this. Now, you have to have, if it's in your trade plan, you have to be able to execute and get risk neutral. So the range must qualify for you. If this pushes through here, you would potentially take a stop. Are you okay with that? If you're not, that's okay too. So then it's not your trade. I got enough time to see what happens with this. Let's see. And these are not trade recommendations. Remember, I'm only trying to share behavior. Are you guys tracking? This is Trader Lab. And by the way, you're all invited to the Bookmap Discord Trader Lab community. There is no cost for this. And this is not a trade calling room. What I do, and I'm going to try to show you this if I can. Had a lot of issues here, because I'm in Costa Rica. Remember, if I drop out, I will come back. This is kind of what the Trader Lab is all about. There's a lot of narration going on. I do a lot. I dictate basically. So I sit and I'm a full-time trader other than when I'm streaming. I've been doing this for a long time. See, the thing about the Trader Lab is knowing where the trades will show up before they get there, not what'll happen. And then it's about, why would I know this is an area? That's what trading the auction is about. Why would I know if I took a short here, I got to try to scale ahead of this by a tick or two? That's trading the auction. Why would I know? Not what'll happen. Remember, if I can get under here, that I can continue lower, and then I use trade management. That's what I know. I don't know the outcome of the trade. I don't know what's going to happen. Remember, the outcome of any trade is random because we're in a 100% random environment. Guys, you know what's so hard about trading? Uncertainty. And the reason we load indicators and time frames is we're trying to overcome uncertainty. What might it mean if we're in an environment where there is no certainty and you're trying to solve for the wrong issue? If you, instead of focusing on confirmation and certainty, because you need that psychologically, how about doing what the casinos do? They know there's no certainty, but they know the games they use have a statistical edge. That creates their certainty over a large sample size of random interactions and outcomes that they extract the dollars from the gamblers in a random basis. So they don't know the outcome. How can you know the outcome if the casinos who've been doing this forever don't have an answer for that? So they don't try to find that answer. Their answer lies in edge. And that's the business. So if you're trying to solve something that doesn't have a solution, how can you anticipate or expect to stay in this business? And I'm not saying you'll be able to stay in the business no matter what you do, because there's a lot to do to actually achieve that goal. But do you think if what you've been doing is not aligned with the business, that you might have a better opportunity to achieve your objectives, if your objective is to build a career in the business, by only interacting when you have edge and building on top of a proven process like casinos? Does that make sense? That's Trader Lab. Is that making some sense? So if you took this trade, which is entered here, you would get stopped out above here. Are you okay with that? The goal was to get here. If the trade fails, then the trade fails. The outside edge is up in here. It's mean reversion. So let's see what happens here. Remember, your stop is not here. It's 2 to 3 ticks above. And if it takes you out, you take a stop. Now, here's the question for this astute audience. If your entry is here and your stop is here, can you afford to take that kind of stop versus getting short here on a lagging indicator? The point of trading, in fact, there was a good book written called The Best Loser Wins by Tom Hogard. You guys might have heard of it. Trading is not mechanical. Anyway, there's a lot going on. You guys are all welcome to visit the Trader Lab. You know, you can see I'm posting all the time here. So, and everybody else too. Look at all the charts, all the interaction, who's on the shorts, who's on the longs. You know, in the Trader Lab, you could be long, short, doesn't matter. There's not anything right. We have traders who are long. We have traders who get short while others are long. And it's always kind of interesting, isn't it? So what do we have here? We still have resistance. We're still at our level. Now the trade looks like it's going to fail. That's okay. Would you be okay with that? You got to be okay with it. So if the trade fails, then you have to look outside. And the thing with mean reversion is there's no walls. They're areas. This is still the outside area. So we're still going to look up in here. So the question becomes, is the low of the day in? And I'm going to say I have no idea, right? So anyway, this is the Trader Lab. You're all invited. There's no cost. You can use the link in the bottom of YouTube. There's 60 PDFs of these structured trades that you can download and reverse engineer. I'm not a vendor. There's no specific course. I put these together because, and these are actual trades that I took, and also screenshots of other things. You know, traders were saying, what are you doing? These are broad strokes. These are just high-level ideas. If you come to Trader Lab, there's a lot more, and we can really get detailed and into the minutia in the Trader Lab. And it's then about finding your groove, or the time frame, if you will, that you operate in. And then that's individual. Some traders are going to put trades on and hang out through all these rotations. Other traders are going to be trading there to there, from there down to there. This is a good short. This one over here didn't get to the scale. You take a stop. If this is the fractal you trade. I don't like trading a lot. I'm more inclined to go for the larger rotations. It's just my nature of risk reward. So what I do is I try to really use microstructures for triggers. So my short would be here with a stop over here, you know. So if I don't get my scale, and I normally put my scale 1 to 2 ticks before, so I would not achieve a scale, and right here I get taken out, you know, or over here I take a stop. I'm okay with that. I'm not done with the shorts yet. I'm just trying to find location. So right here, I don't have anything, but I'm still out in my area and it can push. So I just have to wait. Let's see if we get another structure here. Microstructure liquidity is right here. Let's watch. Right there. Now, this could be too scalpy for you guys. I understand. Not you, might be taking another short. I need to come under here, and I can still come back here. So what happens to me, and it's just me, and I'm okay with it. I understand. I don't, I don't throw myself out a window if I take a stop. I got over that a long time ago. Not how I feel about it, what I do. It's how do you experience a stop? In other words, if you take a short here, are you despondent and now your brain is scrambled? Or are you going, well, what has changed? I pushed a little bit higher. I'm in my area. These are levels. They're not walls. I'm still in my area. If I find too high, and where's too high? Is it there? Is it here? I don't know the answer. If I get short over here, I'm still thinking about this, and it could still take me out. So I just have to try to read it, because I think Unless something changes, I'm going south. And that's not a recommendation. This is trading your plan, not my plan. You might have a better plan than me, and it's not about, that. It's about over time, do I have a statistical edge? Over time, with overhead and cost of production, just like the casinos, if I take my next trade here, do I have a probability of getting here? What differentiates this short from this one? How about nothing? Are you guys with me? I'm still coming for this. Are you guys tracking? So if I put a trade on here and I don't get risk neutral, I'll take my stop. If I put my trade on over here, my stop's going to be up here, and I'm going back for this. If I get my scale, I now have my helmet on, I go risk neutral, and then I'm going outside for a range trade, you see? So whatever happens, happens. Can I afford to take tight stops if I have good entries? Yes. Over time, does that pay me? Well, I'm going to say for me, yes. But that's only because I have trades that I have vetted, that I have confidence in, even though I cannot predict the outcome of any single interaction with the other participants. Please give a thumb up if you're in YouTube. Remember, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, and build out your plan. Guys, remember, if you're in the Trader Lab, it's not taking these trades. It's taking your trades. Where are your trades? Now, here's some choices for you. If you take a short here, you have a choice. If you get short here or here, your stop is here. All you need to do is cover the range from your entry to failure to get risk neutral. Your stop stays over here, so you would scratch, and then you'd be going for a break below here and lower. That's the initial process in Trader Lab, a minimum 2-lot configuration. Why? So you can buy the stop on your runner and then manage it and better manage your fear. There's something called Jekyll and Hyde. Hyde's the lunatic that resides in all of us. Fear, FOMO, all of that. We all experience it. How do you better manage FOMO? Number one, statistics. It takes it out of the emotional realm and puts it into the statistical realm, makes it tangible. The other part is getting risk neutral so you can better manage your fear. Because with these rotations, you go from euphoria to depression, back to euphoria, back to depression, don't you? You feel it? That's emotional states. We need to understand emotional states. We need to better be able to manage emotional states. And we have to be able to accept we're in a business that has, like every business, overhead and cost of production. Please hit the like. Hit the link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab community. There's no cost. Download the 60 PDFs of structured trades. Access the library of webinars. Watch the primer webinar first. And it's got over 30,000 views. Visit the Trader Lab community. There is no cost, and I look forward to meeting all of you guys. No matter how long you've been trading, bring it to the Bookmap Discord Trader Lab community. And there's a lot of additional education in the Bookmap server. Stocks, options, crypto, order flow with a high-tier tool like Bookmap, algorithmic behavior, market maker behavior, swing trading, and a lot more. And it's all available. Use the link in the bottom of YouTube. If you want to visit the Trader Lab, become part of a terrific community. Our senior trader has over 50 years experience. I have 45, both professionally and otherwise, and we've all walked in your shoes. If you're not getting the results you want and you're suffering through Trader Groundhog Day, that is winning trades, everybody has them, but not moving the ball forward, come to Trader Lab. Maybe it'll differentiate your outcome from most other traders that are in the same boat you are. Thanks again. Give that thumb up on the way out. Look forward to seeing you soon.